She was known as the Witch of Wall Street, a name meant to conjure images of a cold, miserly, almost supernatural figure who haunted the financial world of the Gilded Age. But Hetty Green was no witch. She was a master of logic in an arena governed by madness, a paragon of discipline in an era of reckless speculation. While the titans of her time, the Morgans, the Vanderbilts, the Goulds, built empires on debt and grand vision, Hetty Green built a fortune that rivaled theirs on a foundation of two simple, unshakable principles: absolute financial solvency and the courage to act when everyone else was paralyzed by fear. Her strategy was not complex, but its execution required a level of psychological fortitude that few have ever possessed. She did not merely buy market downturns, she waited for utter, complete capitulation. She bought when there was blood in the streets, and in doing so, she turned the greatest financial panics of the 19th and early 20th centuries into her personal instruments of wealth creation. To understand how she turned crashes into fortunes, we must first understand the forging of her unique and uncompromising mind. Henrietta Howland Robinson was born in 1834 in New Bedford, Massachusetts, the heart of the American whaling industry. She was not raised in the drawing rooms of New York society, but in a world of stark, unforgiving economics. Her family were Quakers, a faith that instilled in her the core tenets of her entire life: extreme frugality, a deep-seated aversion to debt, and a profound distrust of frivolity and speculation. Her childhood was not spent with dolls, but with ledgers. From the age of 6, her poor eyesight required her to read the financial pages of the newspaper to her father and grandfather, Gideon Howland. By 13, she was the family bookkeeper. She was not taught finance in theory. She learned it as a practical daily discipline, tracking the profits and losses of whaling voyages, managing accounts, and learning that wealth was something to be preserved with fierce diligence, not flaunted. This upbringing created a mind that was fundamentally different from that of her contemporaries on Wall Street. When she inherited millions from her father and aunt, she did not see it as a license to join the speculative frenzy that defined her era. She saw it as a war chest. She viewed the stock market not as a place of opportunity, but as a den of thieves and fools, driven by emotion and herd mentality. This deep-seated cynicism was not a weakness, it was her single greatest strategic advantage. It insulated her completely from market euphoria. While others saw rising prices as a reason to buy, she saw them as a sign of increasing risk. While others celebrated booms, she quietly liquidated her positions, converting her assets into the instruments she trusted above all others: cash and government bonds. She was preparing for a winter that she knew with absolute certainty would eventually come. Her entire philosophy was built not on predicting the future, but on preparing for the inevitable cycle of human folly. Before we continue, please subscribe and leave a quick comment, even one word. This small action helps the algorithm show this video to more people and tells me these deep dives are worth making. This forged mindset led to the core principle of her operational strategy, a phrase famously attributed to another titan of a different era, but perfectly embodied by Hetty Green. Buy when there is blood in the streets. For her, this was not a clever aphorism. It was a literal, actionable command. Her definition of blood was not a minor market correction of 10 or 20%. It was the moment of absolute systemic panic. When credit markets seized, when established banks failed, when the machinery of Wall Street itself ground to a halt. In these moments, price becomes detached from value. Assets are sold not for what they are worth, but for whatever cash an investor can get. It is in this crucible of fear that true opportunity is born, and Hetty Green was its master. Consider the panic of 1873. The crisis was triggered by the failure of J. Cook and Company, a major bank that was heavily invested in the post-Civil War railroad boom. Its collapse created a domino effect, leading to a series of bank failures and the first-ever closure of the New York Stock Exchange, which remained shut for 10 days. Railroad stocks, the tech darlings of their day, collapsed. Fortunes were wiped out. This was the blood Hetty Green was waiting for. While others were ruined by their leveraged positions in speculative railroad stocks, she, with her massive reserves of cash and safe government bonds, became a buyer. She did not speculate on high-flying stocks. Instead, she bought the deeply discounted bonds of the very railroads that were in financial distress, and she lent money on real estate that was being liquidated in the panic. She understood that while stock prices could go to zero, the physical tracks and the land they were on had an intrinsic, enduring value. She was buying the core assets of the American economy for pennies on the dollar from sellers who had no choice but to liquidate. An even more striking example came during the Panic of 1907, also known as the Knickerbocker Crisis. A failed attempt to corner the market on United Copper Company stock triggered a run on the banks associated with the scheme, most notably the Knickerbocker Trust. The panic spread like wildfire, and the entire New York financial system stood on the brink of collapse. The legendary J.P. Morgan famously intervened, locking the city's top bankers in his library until they agreed to pool their resources to save the system. While Morgan was playing the role of savior, Hetty Green was playing the role of the ultimate opportunist. She was one of the few individuals with enough liquidity to make a difference. The city of New York itself was unable to raise money and was facing bankruptcy. City officials came to her hat in hand for a short-term loan of over $1 million. She provided it, securing the loan with the city's most valuable revenue bonds and charging a high rate of interest. She was not merely buying discounted assets. She was acting as the lender of last resort to America's largest city, a position of unparalleled power granted to her by her unwavering discipline during the preceding boom. This was her method. Wait for the moment of maximum distress. Identify the entity with the most valuable assets and the most desperate need for cash, and then dictate her terms. Hetty Green's genius was her intuitive ability to identify the moment of maximum panic. She felt the market's emotional cycle. But what if this timing could be approached not just intuitively, but mathematically? It is here that the work of another legend, William Delbert Gann, offers a fascinating parallel, focusing not on emotion, but on the predictable, recurring cycles of time itself. To answer that question, we're launching William Gann Trading Insights, a dedicated channel designed to be a complete, ground-up resource for studying his methods. It serves serious beginners who want a correct foundation in market structure and experienced traders looking to add the time dimension to their analysis. We will systematically build a comprehensive end-to-end understanding of his methodology. Find the link in the video description. It is impossible to act as a buyer during a market collapse if you do not possess the one resource that becomes scarcest during a panic: cash. Hetty Green's third and perhaps most critical principle was her absolute obsession with maintaining massive liquidity and a complete aversion to debt. While her contemporaries built their empires on leverage, using borrowed money to amplify their returns during boom times, she viewed debt as a fatal poison. She understood a fundamental truth that others ignored at their peril. Debt makes you fragile. It removes your agency. A leveraged investor is not in control of their own destiny. They are at the mercy of their creditors and the market's violent whims. When a crisis hits, it is the indebted who are forced to sell their best assets at the worst possible prices to meet margin calls, transforming a temporary market downturn into a permanent loss of capital. Hetty Green's strategy was the complete antithesis of this. She ran her financial empire like a fortress, designed to withstand any siege. Her famous, almost comical personal frugality was the outward manifestation of this core principle. The stories of her wearing old clothes, arguing over the price of a bottle of milk, or refusing to pay for heat were not just quirks of a wealthy eccentric. They were the application of a ruthless business philosophy to her personal life. Minimize all fixed costs, eliminate all liabilities, and maximize free cash flow. She understood that every dollar not spent on a frivolous luxury was another dollar available for her war chest. This discipline allowed her to accumulate a pool of liquid capital so vast that it was, in itself, a strategic weapon. In modern financial terms, her cash position was not a passive zero-yield asset. It was a perpetual zero-cost call option on every undervalued asset in the world. It gave her the right, but never the obligation, to buy when conditions were perfect. While other financiers were desperately seeking loans to stay afloat, she was the one with the power to grant them. While they were forced to liquidate their holdings, she was the one with the capital to absorb them. Her cash reserves were the engine of her entire strategy, the fuel that allowed her to go on the offensive when everyone else was fighting for survival. She willingly accepted underperformance during bull markets, knowing that the true prize was not in capturing the last 10% of a speculative rise, but in possessing the purchasing power to buy the entire foundation of the market after it had crumbled. With the capital secured, the fourth pillar of her strategy was her rigorous and disciplined investment philosophy. What did Hetty Green actually buy when the moment of panic arrived? She was not a speculator in the modern sense of the term. She did not trade in and out of stocks based on charts or rumors. She was a deep, fundamental value investor who bought tangible assets and secure income streams. Her portfolio was built on a foundation of reality in a market often intoxicated by fantasy. Her primary investment vehicle was First Lion mortgage bonds of railroads. In the 19th century, railroads were the backbone of the American economy, the equivalent of today's technology infrastructure. But she rarely bought their common stock. Instead, she bought their senior secured debt. This is a critical distinction. As a bondholder, she was a primary creditor. In the event of a bankruptcy, a common occurrence during the era's panics, bondholders were first in line to be paid from the liquidation of the company's assets. She was not betting on a company's future profits. She was buying a secure claim on its physical assets, the tracks, the land, the locomotives. It was a strategy of maximum security designed to generate a steady stream of income while protecting her principal. Her second major business was acting as a private bank through mortgage lending. She lent her own capital directly to churches, businesses, and municipalities, always secured by high-quality real estate which she had often personally inspected. She was a famously tough negotiator, demanding high interest rates and ironclad terms. But she provided a vital source of credit when traditional banks could not. This business generated a massive and consistent cash flow, which she then used to further expand her investment portfolio. Finally, she was a significant investor in real estate, particularly in growing cities like Chicago and New York. Again, her timing was impeccable. She bought properties during economic downturns when prices were depressed and held them for the long term, benefiting from the nation's steady growth. She understood that land in a prime location was an asset of enduring value that could not be inflated away or bankrupted into non-existence. The common thread connecting all of her investments was a relentless focus on intrinsic value. She bought real things: railroad tracks, property, secure legal claims on cash flows. She never bought a story, she never bought a projection, and she never bought anything she did not thoroughly understand. The final element, the one that bound her entire strategy together, was the power of patience. Buying at the bottom is a feat of courage, but profiting from it is an act of endurance. Hetty Green's time horizon was not measured in months or even years. It was measured in decades or a lifetime. Once she acquired an asset during a panic, she was prepared to hold it indefinitely. This psychological fortitude is perhaps her most remarkable and least replicable trait. She was able to be so patient for several reasons. First, as we've established, she had no debt. There were no creditors who could force her to sell at an inopportune time. Second, her personal expenses were so low that she had no need to sell assets to fund her lifestyle. Her portfolio was never a source of emergency cash. It was a compounding machine. This freedom from external pressure allowed her to operate on a completely different time frame from the rest of the market. She was engaging in a form of time arbitrage. exploiting the market's obsession with short-term performance. While other investors were driven to panic by a bad quarter or a temporary downturn, she was focused on the value of an asset over the course of a generation. Her holding period only ended when the cycle turned completely. She sold when the panic and despair that had allowed her to buy were replaced by optimism and euphoria. She would liquidate her holdings, selling the very bonds and properties she had bought for pennies on the dollar to a new generation of enthusiastic, often leveraged investors who were convinced that this time the boom would last forever. She sold into strength, converting her appreciated assets back into the safety of cash and government bonds, and then she would wait, with the unshakable patience of a predator, for the next cycle of human greed and fear to deliver the next great opportunity. It was a perfect, endlessly repeating system. In the end, Hetty Green's story is a powerful testament to the fact that success in the markets is ultimately a battle for psychological mastery. Her immense fortune was not the result of a complex algorithm or insider information, but of an iron will, a contrarian mindset forged in her youth and a set of simple, unbreakable rules. Her life is proof that temperament, not intellect, is the ultimate determinant of investment success. Her iron will, her patience, and her ability to act when others were paralyzed by fear are timeless lessons. Perhaps no other book in history has captured the raw, intense psychology of speculation and the brutal lessons of the market better than Edwin Lefebvre's Reminiscences of a Stock Operator, which is presented as a fictionalized biography of the great speculator Jesse Livermore. It is arguably the most important book ever written on trading, and its central theme is the brutal but necessary education in managing risk and mastering one's own emotions. For those who are committed to a deeper, more methodical study of these principles, we highly recommend the edition that features a unique, detailed chapter-by-chapter analysis by Max Davidson, an interpretation specifically designed to translate this century-old wisdom for the modern reader. A link to this essential edition has been provided for you in the description below.